So let's take a closer look at the markets this morning. Joining us to do just that is Marta Norton. She is Empower Investments Chief Investment Strategist. And Marta, all of the things that are swirling out there, whether you look at the political front, whether you look at the earnings front, whether you look at the data front, what is grabbing most attention with investors these days?
Well, I mean, if it were earlier in the week, of course, it would be the tariff narrative and fiscal uncertainty generally. But I think right now, as we're moving and focusing more on earnings and we're seeing all these CapEx announcements as it relates to AI, I think we're returning to that narrative that we had last week around DeepSeek and how U.S. companies are responding to that. And of course, right now, we're seeing that the tech titans are not backing off their CapEx plans at all, which would suggest that the focus is more on expectations around demand and use cases than it is around efficiency and maybe a cheaper way to do things.
Which means what from the investing perspective? Go ahead and continue to load up on the companies that have done so well with AI as the forefront?
Well, I think that, that's an understandable narrative, but I think the real question mark that investors face as it relates to AI and potentially as it relates to the market overall is a question of valuation. And I think this is the single concern that I have. I know we're talking about a whole lot of different moving parts these days, but I think it's as pedantic as a valuation consideration. When we're taking a look at the different sectors of the US market and we're looking at their valuation time series going back to the 1990s, we're seeing a lot of these sectors in the highest deciles in terms of their valuations. And of course, this is particularly true for an area like technology, where it's in the highest decile. And when we look at forward returns from those types of valuations, we see that there's a higher risk of a sell-off. And of course, that's a well understood point, but I think it's worth raising that valuation is one of the larger, though pedantic, concerns that investors face in 2025.
I mean, I guess it just makes stocks very vulnerable to any punctuation or any puncture points that might come up. Any headline can really throw things off and change the narrative pretty quickly.
That's exactly right. And that's what we're seeing so far in 2025. So, of course, we had DeepSeek rattle the markets with concerns around efficiency, and we saw the NVIDIA response to that. There's been a bit of a recovery, but it certainly isn't back to where it was. And then we see the tariff concerns. And, we can speak about that in a number of different ways. There's a number of different ways to slice that, but that is something that can rattle the markets as well. So it's not necessarily looking at the macro picture and saying, hey, we're in a really devastating or terrifying backdrop. Actually, there's a lot to like about today's economy and the general backdrop that we're operating in, but there's still a question mark on valuation and what's already priced in.
So what do you do in that scenario? Do you save some dry powder? Do you try and buy on the dips? Because there haven't been that many, and every time there's a pullback of 3 or 4%, it seems like money kind of floods into the zone.
Well, there is that buy the dip mentality that I think has been baked into investor psychology because there hasn't really been a good cleansing for quite some time, to your point. But I think a larger point that I would call for is this idea of balance over conviction. So not necessarily picking certain segments of the market because there's such a great narrative or such a great valuation argument for them, but instead making sure that the portfolios are well calibrated. And I'd actually say that that requires an active decision because as we take a look at the broad market indexes, we know they're very top heavy. We know 30 cents or more of every dollar is going to the mega cap names in the S&P 500. So that requires investors to do some recalibration on their own and actually introduce small caps to a portfolio. And, small caps have their own concerns, but there's a relative valuation argument for them. And there's also a bit of maybe a benign environment in the sense that from a fiscal standpoint, at least, the domestic producers, and that seems to be in favor with the current administration.